All right, folks, it's Sunday. Hope everyone's doing well. This is Kush with the weekend market update. We're going to keep things really simple. There's a lot of, questions, concern over Bitcoin's price action. I'm seeing a Google chart being presented, one that we posted about a month and a half ago, I believe. Try to do daily videos for the members, and I'm pulling this video from a December video. And just playing that because we talked about this possibility as an option that was on the table. I wasn't looking for it to come down here, right? None of that's all trader term, right? Most traders end up losing, folks. There's nothing to be done if I think something's going to go somewhere. The plan for me is what am I going to do about it if it goes there? Not sell it all in anticipation of it going there. There's a reason why Michael Saylor doesn't enlist all of these great traders, right? I'm saying this tongue in cheek, to buy and sell his Bitcoin to increase his Bitcoin stack. Why? Because his Bitcoin stack wouldn't increase; it would decrease with that with this methodology. That's my opinion. Everything I'm going to present here is obviously my opinion. That's not a fact. I'm not a financial advisor. I'm here to give you my opinions on the market. Market's going to tell us ultimately what the facts are after the fact, but there is a fact in front of us, and that's this Google chart. And I'm going to start this video from the December member video and just let it play out here. Till that move, until the dip before the rip, if you will. Now, go back to Bitcoin. What do we see? We see a structure that's stronger than what we saw in Google. Why is it stronger? Because you have 1, 2, 3, 4, 5, A, B running flat so far. I almost would like to see it undercut the April lows at 75K. Really get, really get the timeline bearish and give us an expanding flat. I would really. All right. So let's get so that's one of the possibilities we looked at, and now let's kind of fast forward to where we are today, and let me remind you of remind you of the core principle here. The core principle is we judge and speculate forward returns based on where we are in relation to expansive uh, reaccumulation and accumulation stages in the market. We do not judge solely on a moving average or an Ichimoku cloud on its own. Those two are confluence in an idea, and I'm going to show you what that looks like with the Google chart in two different frames of reference to kind of help better frame why I'm so bullish right now and think we're on the precipice of one of the largest moves we've ever seen, um, not only in stocks but in Bitcoin. Let's just start with the weekly chart. Okay, let's start with the weekly chart, and let's just do this exercise with Google, and then I'm going to do it with Bitcoin. Reaccumulations take many shape and many forms. Some have springs, some don't. We're not going to get into a Wyckoff tutorial lesson here, but on high time frames, on low time frames, they take many shapes, right? Rounded bottom, double bottom, Adam and Eve, rectangle. Okay, there are many things that look like reaccumulations, and they show up on high time frames, just as they do as low time frames, is like a piece of broccoli, right? Or Elliott wave is the same concept. With a big wave, there's smaller waves within it. Reaccumulations uh, are no different. And so with Google, we see a fairly large reaccumulation that started in 2017 and came down to really spring in COVID to kick off the next expansive phase of the market. Okay, we have a true expansive phase in the market. This is what I'm pointing at here. When you see a clear expansive phase in the market, we can then layer in some Elliott wave concepts. We can layer in the Ichimoku cloud on the weekly or the 30 week. And I've been asked why the 30 week. Well, it's from a book, Stan Weinstein's How to Profit in the Bull and Bear Market, talks a lot about trend analysis, stages of the market, stage one, stage two, stage three, utilizing the 30-week. I kind of overlay that with the cloud because we see so often the cloud and the 30-week add confluence to secondarily the idea, but expansion, this expansive phase in the market must be present. And expansion in and of itself within the reaccumulation isn't good enough, right? Especially when you're looking at massive reaccumulation patterns. I'm jumping ahead. So point being, so Google, for example, on a weekly, um, what was the clue that this potentially could have been distributed? Well, you have, this fumbling around under the 30 week and some acceptance in the cloud, and then no meaningful push off over the 30 week. And in a situation like this, if this impulse is going to continue, you don't see overlapping in and around a 30 week as it starts to coil down. You see maybe a dive down below it, but then you see an impulse up and above. You didn't see it there. Is that enough to say a new downtrend starting? No, it's not. Um, as you broke this low, you had your changing character, right? And now price came out and below the cloud. Uh, as we see so often with assets, there's a period of consolidation and a check back to the 30 week, right? And that rejected and that signified the next major leg down. This is where people are kind of thinking Bitcoin, either this is where Bitcoin is now or this is where Bitcoin is now, okay, with another leg. The problem with this analysis is there's no respect at all for major differences in structure. What do I mean by that? Where was the what was the dominant structure uh, that preceded this entire move of question? Because you're in it in the time there's a question, you don't know the outcome. The dominant structure behind it was an expansive phase. Okay, there was true expansion that occurred in this market following the reaccumulation. Now we're going to do the same exercise and we're going to fast forward. And we're going to see why did Google structure not break down this time? What do I mean by that? Well, you had a downtrend, you had a basing, you had a little consolidation over the basing, then you jump the creek, and then you impulse up and it's game on, right? No, it's not. Oh, all the way back down. Okay. And then 1, 2, 3 wave move, it's on. Actually, no, it's not. It's all over, right? All the way back down. This is where Bitcoin is right now. Okay, just breached the Ichimoku cloud. Here's the pivot low, and oh, it just went below the low. So the bearish takes out there, we haven't even breached the pivot low. So we haven't even changed character in our market yet. The claims are that we're entering a bear market. Yet there is no acknowledgement, just like there's no acknowledgement in Google of where is the expansive phase in this market. We have a reaccumulation event, we have a consolidative event, a sign of strength, if you will, and you have no expansion, no expansion. So all this was occurring and it undercut the lows. And then what did it do? Actually prepared for the complete opposite of what people would have you think was going on with Google. The complete opposite, to the tune of a beeline to the 1786 extension and then next to the 2312 extension. So, moral of the story here is if you use these same principles as I just shared with you in the bear market or bull market correction, whatever you want to call it here, they would have failed you. They would have failed. We have a loss of the 30 week, you have a loss of the Ichimoku cloud, and this is a sell, right? Everyone telling you Bitcoin is a sell here. Okay? Where in fact, well, it's not a fact. Google wasn't a sell at all there. In fact, it was the opposite. It was the point of maximum asymmetry. All right, let's go to Bitcoin and do the same type of exercise. So on the monthly, we're basically exactly where Google went on the monthly, back to the 30-month simple moving average. Okay. From a weekly standpoint, we're not quite there yet because we haven't undercut uh, the April low. And so we still have, if that's going to happen, a few percentage points to go. I almost hope it happens because then it's like I was saying back in December, um, that really would get, I mean, already you have even some bullish accounts getting flustered and getting conservative, or the term cautious short term, bullish long term. Those are the things you want to hear here. You're not hearing a lot of people that are saying they're extremely bullish short term. And when I say short term, I mean within the next 6 to 12 months, right? Like extremely bullish. And I'm here to presenting a concept that we saw come to fruition, and we've seen it many times. I've done videos that have compared silver and gold reaccumulation structures and extended fifth waves. A lot of things are aligning, and to look at this on its own and say, "Oh, you lost the cloud and you lost the 30 week." This is not a good look. Uh, discounts everything that came before it and the lack of any expansive move in this market. This is not an expansive move. This is just the second half of a reaccumulation event. Okay. This is a reaccumulation event. This is a consolidation and a sign of strength. This is what I call, this is a SOS sign of strength, about as strong as we've seen Bitcoin in the last, 5, 6, 7 years. Why? Because it's continuing to consolidate above the reaccumulation. Where are we going here? Where are we going here? Let's see. Oh yeah, a matching fib from the fib standpoint of Google, within 6 months is 224. Within a year is 493. Okay, that's it. That's the end of the video. Hope you have a great rest of your weekend. Take care, folks. I won't be doing videos I'm away for a few days for the members, for a work trip. So I will be back with videos Wednesday night. Take care.